Everybody, welcome back. Thank you for tuning back in again, and hopefully you guys find this information that I provide informative and helpful. I'm open to any new ideas that you might have, so feel free to leave it down in the comments, and I'm happy to make a future video. Again, I'm a CPA with just about 2 decades of experience, so pretty much what I provide to you is what I've experienced throughout my career and throughout my experience with preparing tax returns. So today, let's just get right on into it. Today, I want to talk about Common Efile rejects, as we're starting to come up to where the IRS is opening up their e-file system. It has not been 100% announced yet when they're going to do so, but typically they do so the last week of January, typically the last Monday. So my best guess is that e-file system will open up on January 27th, 2025. And then but prior to that date, a lot of tax softwares allow you to start submitting your returns. However, I do not advise that you start submitting your return prior to that date. As there's still a lot of moving parts, there's still a lot of moving components. You may have missed a tax form, you might not have a tax form. So once you hit that submit button, it's basically going to be sitting in queue for until the 27th, and sometimes some of the larger tax preparing companies, the IRS will actually start sending test returns in to start accepting them. So, but again, that you don't get, it's not any quicker or any slower. So I always just suggest at least wait until then, if not longer. And then especially if you're claiming the earned income credit, they typically don't even start processing those refunds until mid-February. So we have some time, but I wanted to talk about some e-file rejects, the common areas where these items can go wrong, as it can be frustrating. You submit your return and then, it's later turned out that, hey, my return has been rejected, and nothing is more frustrating than that. So kind of some of the common things that I have seen is the first one is a taxpayer Social Security mismatch. So basically what happens is when you submit your return, the IRS submits it through a database, the Social Security database. They're going to confirm out your name, your date of birth, your full name, so your first, last name, middle initial is a little less important, but definitely first, last name, and date of birth. It agrees to the Social Security number. Now, if you've changed your name, so whether that be married, divorced, or just in general, you just changed your name, and that name was not changed or updated within the Social Security database, you're going to have to go back and use your prior maiden name. So this one's a pretty easy one to fix, or it potentially could be that you made a typo on the return and you misspelled your last name or whatnot. So again, a very easy one to fix, but to catch it, as I would just always suggest, just double check, do a one-time through, make sure everything looks good. I know on some of the tax software it's a little bit harder to review everything, but if you do have a professional prepare it, just check it, check the government forms. It's pretty easy. I'll make a video going forward, a future video on what to look out for and how to read the government forms instead of the inputs. Because a lot of times what happens if you use one of the larger tax preparing softwares, you enter your information, what's known as input forms. So it makes it more user-friendly, and it walks you through the process with questions and step-by-step. But that's not actually what the IRS sees. The IRS sees a condensed version of a 1040, which is, a two-page form, and then plus whatever the schedules are and whatnot behind it. So again, I always like to review the government copy before sending it out. So that one's a pretty easy one to correct. The next one I want to talk about is similar. It's incorrect dependent information. Basically what this means is there's a mismatch with your dependent on the Social Security database. So this one's common. Sometimes people, you mess up date of births, or again, a typo, or, just the name doesn't agree to what was actually filed with Social Security Administration. So again, check their Social Security card, make sure the information that you have is complete, updated, and accurate, as you will not be able to e-file a return without Social Security numbers of both taxpayers and dependents. So again, that one's a fairly easy one to claim, to fix. It's just double checking the information similar to the first one. Jumping into the next item would be a dependent claimed on another's return. Now this one is definitely a frustrating one, and I've run into this one multiple times. So here, this is basically when either, you have separated parents or divorced parents or parents that were never married, and one parent claims the child on their tax return and basically gets their return filed before the other parent. So therefore, automatically your return will be rejected because that child has already been filed and is in the IRS system, regardless whether that parent is able to claim them as a dependent or not. That's one scenario. The second scenario, which is also extremely common, probably equally as common, is your child went on ahead and filed their own tax return and did not check the box saying that they can be claimed as a dependent. So therefore, they were filed as an independent on their own tax return, and again, not really getting any sort of great deal of benefit on their return. But again, it's usually an error, whereas the child, just started having a job, just started working a job, and they went on ahead and quickly did their return in one of the bigger tax softwares and forgot to say, answer the questions where, does somebody provide you more than half to your support? Does, do you live at home? Are you, those sort of questions, and they answer them wrong. So consequently, the return ends up getting filed wrong. Because like I said, I had mentioned before, is that a lot of these, the larger, or actually all of them pretty much ask you questions. So if you answer the questions wrong, then you're going to ultimately end up getting the wrong box will be checked on your tax return. So it's just something that when you're doing your taxes, you want to take a step back, you want to take a few moments, and you want to make sure that everything that the questions you're answering are complete and accurate. I know it can be time consuming and annoying, but you just want to make sure you spend your time and take the time doing those questions, or opt to have a professional do it. I can't imagine going through those screens to do it. Once you get good at it, you know where to put them on the government forms, you know where to look for, and it just makes it more efficient. So in order to fix this one is hard because if the child claimed themselves as an independent, you can't e-file your return anymore, and this is where it gets frustrating. Once that return is accepted in the e-file database, that's it. So you can't e-file your return, even if they are technically considered under IRS rules able to be claimed as a dependent. You still cannot e-file your return. You have to go and paper file your return, and then they're going to have to go and amend their own return to reflect that they're going to be claimed as a dependent. So overall, it's kind of a pain, but again, I would suggest thinking it through. So before you actually go and amend your return, the way I would suggest doing it is, looking at it. How old is your child? If your child is, say, 19 and they're a full-time student, and you have other children as well, and you're married, I don't think the difference may not be that great. You may miss out if they're a full-time student. You might miss out. You could potentially miss out on the tuition credit. It's a $500. It's a $500 child tax credit once they hit 17. So again, that's not a great deal of money. That's at least what it is now. That can change again in the future. So again, I kind of encourage you to do it both out, see what they got as a refund, and vice versa, to kind of then determine, hey, am I going to amend my return, or am I just going to let this one go? And then similar, if you have your ex-spouse or your child's mother or father claim them before you and they weren't entitled to, you're going to have to go on ahead and paper file a return and claim them as a dependent. This is where it gets a little bit tricky, as the IRS typically doesn't get into legal battles. Whereas if you have if you have an agreement, they'll typically go off the agreement. But if there's not an agreement in place, they don't typically get involved in any the civil stuff. So you can definitely try to file a paper return, and I would say try to substantiate how you provided greater than half the support, how they lived with you for more than half the year, obviously relationship, which is pretty easy to prove. The other option is, again, to work it out with your ex-spouse and just keep them off, and then you don't have to paper file a return at all. You can e-file them without the child on there, and then if you figure out, so what I'd suggest to do if you're doing your own return, put the information in with the child's claiming the child, and then write down that refund amount or whatever your tax due amount is, and then take the child out and then write that down, and then whatever the difference is, see if you can recover that back from your spouse. If your spouse is on board and willing to pay that back, then I would just leave them off the return. Again, where there becomes a big issue here is if you only have one dependent. If you only have one dependent, and this will get into my next one, you will not be able to claim head of household. So that hit is a lot more significant, because if that child is, say, 10, we'll just use 10 years old as an example, well, you're going to get a $2,000, child tax credit for them. And then if you're going from, single to head of household, because now you have a qualifying dependent, you can claim head of household. as long as you meet, the criteria for it. You're also losing out on an increase in standard deduction. So again, something else to consider, but that's why I say the easiest way to do it sometimes is to just work it out amongst the related parties. Then that way you don't have to print the return, mail it out, put it in the post office, make sure the IRS gets it, send it certified mail receipt, which is the way I always recommend doing it when you have to paper file, so you know that they received it, because otherwise there's not really a way to track it. So again, that one is probably one, if not, that's probably more common. It's definitely a pain, but I'll get to another one which is also a pain. Doesn't happen as frequently, but it's still fairly common. I'll get to that later. So the next one I wanted to go over is filing status. So this again is what I had mentioned before. So the biggest one here is you claim head of household on your return. Typically, the bigger softwares won't allow you to claim head of household without not having qualifying dependent, because that is the IRS requirement, and they know if you don't have that on your return will get rejected. But again, sometimes you can get around it, and if you are able to get around it, once you submit it to the IRS, that return will get rejected. So the biggest difference here, again, is you got to make sure you have that qualifying dependent on your return listed. Name, social security number, date of birth needs to be on your return. Because if you think about it this way, if you're unmarried, your standard deduction goes from $14,600 to $21,900. So, you're kind of put in between. It's not quite double, but it's about 1 1/4 of what it would be if of a single standard deduction. So again, just make sure you get a dependent on there if you're claiming the head of households, and then as well as you want to make sure that you fit all the requirements of head of household, which again I could talk about that in a later video. AGI mismatch. This one's another big one. This one can be a pain in the butt too, because a lot of times what happens with this is either number one, people don't maintain their records, so you don't maintain your prior year's return, you never printed it, you never saved a copy of it. So then when you go to e-file your return, you need to, if you're e-filing a self-prepared return, you need to provide your AGI or self-selected PIN. A lot of people don't have the PINs, so typically a lot of the tax softwares that are self-prepared require you to provide your AGI in order to e-file that return. Now, if you use a tax professional, that is not required on the return. It's just another step. It's to prevent to prevent identity thefts, prevent people from filing incorrect, falsified returns where they get your information. So this one can be a pain because, again, if you don't maintain, information and whatnot, then 100% it can be a pain. So my suggestion for fixing this, and then the other area actually on this one too, is sometimes the IRS adjusts your adjusted gross income. So you may receive a notice throughout the year where they said, hey, you're not entitled to, whatever, or you left income off your return, or, you weren't entitled to, say a student loan deduction, or, something like that. I would make sure that you save those notices in the event that they did change your adjusted gross income. Now, it's somewhat of an easy way to fix. You just have to set up an account with the IRS on their website. You can do it all online. Make sure you go to irs.gov, and you're going to want to order a transcript. So order a transcript for the prior year. Once you set up your account, they do need to do a good amount of verification if you do not already have one. But once you get the account, they will just dump that transcript in there, and then you can go, it's usually close down to the bottom, and you can find what your AGI was, put it in the return. But again, it's frustrating because it'll take you time to get it. So you're not going to be able to file your return right off the bat. So again, it's going to be delayed. So it's this suggestion, I just suggest if you receive an IRS notice throughout the year, put it in an envelope, have a tax envelope, a physical tax envelope that you put in a drawer and like a folder, and then anything communication you get from the IRS, stick it in there. Print out your tax return, or if you're somebody that likes to keep electronic records, make sure you save a PDF copy of your tax return, whether you do it yourself or you use a tax professional. Use a tax professional. It's a little easier to get a copy of it because you can usually just call them up and say, hey, I need a copy of my return, and they'll be more than happy to provide it. The next item is missing an IP PIN. So basically what this is an identity theft protection PIN. So periodically from time to time, the IRS may determine, hey, you're at a higher risk, and we need to send you an ID theft protection PIN. So basically what this needs to do is this needs to get included in your e-file, the return, in order to e-file it. So it's a PIN So it's kind of like you think you're going to the ATM, you put your debit card in, you enter your PIN number, and then you can get cash out. So similar here, whereas before, if you don't have one of these pens, you can just have your social security number and whatnot. So it's just kind of like an extra level, or probably a better analogy would be like two-factor authentication, where a notification gets pushed to your phone and then you have to approve it. So if you don't have that, you can also pretty easily do it. You can also go on the irs.gov and locate your IP PIN on the irs.gov. Again, you'll have to answer some security questions and whatnot, but they will be able to provide it right there as long as you can pass answering those security questions, and then you can add that into your return. This can be hidden a lot of times if you do self-prepared returns, so usually Google can be your friend on it depending upon what tax software you're using in order to where to input it, because again, it can sometimes be hidden. So I just say Google it, say, hey, whatever you're using for tax software, where do I put it in? If you're using a tax professional, just provide them the PIN. And again, this goes back to what I'm saying, whereas if they usually send them December, January. If they do, just put it in your tax folder and then stick it away in a drawer, so then it's there when you're ready to do your return, whether send it off to somebody or do it yourself. Where this one becomes tricky is, your return can get filed for somebody that, you could get a reject saying that your return has already been filed. Now, this is when you're a victim of identity theft and you have to paper file your return. And this can be a multi-step process, which, again, I can get into a future video, and it's a pain because you have to paper file, the IRS has to research it. So, your refund in this particular case can be severely delayed. The other item that's popped up more recently since the Obamacare affordable health care coverage, where you're able to buy insurance off the marketplace, is if you do buy insurance off the marketplace, whether you get a subsidy or not, and it's bought off the marketplace, you need to include your 1095A, which a lot of times doesn't get mailed out, but it gets provided electronically. So depending upon your state, somewhere on the national website for health insurance, some states have their own specific health insurance website. So you want to just make sure you're logging into your account and pulling that form out. If you did purchase insurance, even if you only purchased it for a month, it still does need to get included. If you were filing, say for example, you're a dependent and you were on your parents and they bought health insurance in the marketplace, you will still have to include it on your return. It will still get rejected. So again, it's a little bit of a pain, but hopefully some of these items, by being diligent now, by looking out for these items as tax time comes and as the IRS starts opening up, you can save stresses as the season progresses. Again, hopefully you guys found this information beneficial and helpful. If you did, please subscribe, give a thumbs up, leave any comments, and again, I'm happy to respond to the comments or make a future video on anything that you guys would like to hear about. But again, thanks for tuning in.